Hey everybody, this is Jim at SP500chart.com using time-honored techniques to understand modern markets, featuring daily technical analysis videos of the S&P 500. And before we look at it, I just need to remind you that the video and the website are for educational purposes only. Nothing stated at the site or in this video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy who draws lines on charts. Okay, starting out looking at a 30-minute chart, I want to show you a couple things that are interesting. If you've been following our analysis over the past a week or so, well, probably more than probably about a week and a half, we have been looking at this rising move off of this bottom down here in the low 1200s as one of two things, either as a rising wedge, which would be bounded by this line that I've highlighted and this red line right here. Okay, so you can see that's a wedge because these two lines are getting closer and closer to each other as they rise off this bottom. The other possibility was a rising channel, and that channel has its starting point not at this bottom back on the 19th, but rather the low of the 21st. And you could see how it really did the S&P really did kind of stay within that channel for quite a while. Well, the wedge that we were looking at broke down on Friday and ended with what I mentioned might be a little back test, and we would see if we would know a little bit more about this market if it also took out this bottom line of this channel. And by golly, that's exactly what we got today. And what's interesting about both of those moves, both this wedge right here and the channel, I was debating which one of these is the right thing to go by, and it turns out it's looking like both of them were kind of running concurrent. Because once this wedge broke down, what did we get? We got a nice little back test back to that wedge. Then once this channel line broke down, we came down to a line that just happens to line up with the last two, well, not the last two, but it just happens to line up with the lows on the 20th and the 24th. And we bounced at that level on this trend line, came back for a back test of the channel. So I would have to say at this point that it's looking likely that that this is signaling something of a reversal. I don't think it's going to be a real long protracted reversal. I kind of suspect what this would set up would probably or would very possibly be a bull flag, because we've still got this pattern that we're dealing with, this inverse head and shoulders. There's our left shoulder, head, right shoulder, and this points to where? Points to 1378 to 1380 as its target. So, I'm not thinking that that we're going to, I'm not saying at this point we're going to miss that target. So where do we usually come back to after a head and shoulders breakout? Very, very typical for the markets to return to test that neckline, which in this case is around the 1268 area. We've also got this line, which is the neckline from the head and shoulders top of 2011 as we extend it to the right. So I'm expecting weakness, and if this little line breaks down right here, this purple line, then what would that mean? Well, that would mean we have a little head and shoulders top right here. Okay, and that is also a possibility. So if this line were to break down, we could measure the height of the head from whenever it breaks down, whenever that might be, and you can see that it's looking like that kind of it kind of makes sense in light of what we're kind of expecting from this pattern, and that is a back test to that 1270-ish area. So if tomorrow the market continues to slide, and then we end up with a breakdown underneath this purple line, then I would expect that move to have continuation until we reach something very close to that 1270 line. It could be this neckline itself, or we could reach this rising green trend line, which as you can see here, once I reposition that, right there is drawn over the from the October lows and the November lows, and was hit again almost in December. So we've got now signs of weakness, but along with that sign of weakness, we also have to recognize that there is this area of support that the markets could very well be heading down to test. So I think I'm going to keep it short, sweet, and simple for today, because that's really what took place. Watch this line. If that breaks, then I think the low 1270s are definitely in order. But you know, every now and then there's a move like this, and then the market just decides it's gonna have a little shakeout and then plow back on up. I'm not really expecting that, but that's possible, because I mean we did get a bounce on this line. The question would be, could we also overcome this little resistance line, which, by the way, you can see where that comes from, comes over this top, and where we met resistance today. So these lines are definitely working. Let's just see to exactly where they take us. And for right now, I think that's about all I can offer. If you have been following the videos and you're a subscriber, then you're pretty much up to speed on this, and none of this should come as any surprise. If you were watching this on a delayed basis and you're thinking, gee, you know, the guy didn't really give me that much detail, well, since this is would be on a delayed basis, go back and look at the video or two before this one to kind of bring you up to speed on all of the developments that led up to Friday and yesterday. Again, thanks for watching. Take care. And if you're not a subscriber, just think about it. Come on over to sp500chart.com and check out the details.